Crypto markets grind higher on low volatility as last week's inflation data did little to derail rate expectations as the Fed is set to cut this week. The question is, will they go 50? And does it trigger the next move higher in crypto? All this and more in this week's Crypto Options Unplugged. Welcome back to Crypto Options Unplugged, everyone. I'm Imran Larker from Options Insight. I've got my man Dave from FRNT. And today's special guest is Usman Naeem, Global Head of Derivative Sales and Trading at none other than Coinbase. How's it going, man?
Hey, guys. Glad to be here. Thanks for the invite, finally. I've been asking you for 2 years now.
Yeah, I'm sure that's what happened. I've been trying to get you on here for how long? Should we... we actually know each other from back in the day. So why don't you tell the audience a little bit about how you got into options?
Yeah, so back when I came into the full-time job, I interned and started my grad scheme at Merrill Lynch, joining the equity Vol
Apparently
desk.
there was a really good index trader over there at the time.
Yeah, his name, I can't remember, Paul Gertz? Gertzy, we used to call him? No. Yeah, Imran and I sat one row away from each other. I was the one he was throwing his phones at. And I was trying ducking and diving. But,
Did you have to get him breakfast and lunch and stuff?
Yeah, obviously I screwed it up every time.
It's that love-hate relationship
Exactly.
sales and trading has, right?
Yeah, but it feels like a long time ago. It was a long time ago. But it was a great time, and I think I fell in love with. I had no idea what options were when I started my job. I actually wanted to be a cash trader just because I loved markets, and I thought, okay, the only thing I know is you buy and you sell. But then when I interned and, the whole rotational programs they do, fell in love with this third dimension called Vol. Mm-hmm. And it just, I just was living and breathing Vol during my internship. And I think they felt sorry for me at the end and just offered me the role.
No, I mean, I remember what I loved about you, and this is what differentiated you as a sales guy back in the day, is that you had this hunger to trade, right? So you get a lot of salespeople who start off in banks who, they just copy. I call them the copy paste brigade, right? They just, they take reports that are written by traders or research, whatever, copy paste. They never trade a thing in their lives. They don't really understand what it means. They don't really care to find out, and that's how they go through their life in a bank, right? But then you get the other salespeople who actually get the bug, right? And they find it infectious like the traders do, right? And they can't switch off from markets and they live and breathe markets. And they're constantly coming up to the traders going, what are you doing? What trade have you got on? I've got this on. What do you think about this? Because they actually want to make money out of the market. And that is what makes them hungry, and that's what makes them amazing salespeople.
Yeah, I truly agree. And I remember when I first started, there was an MD on the floor who said to me, a good salesperson is a good trader and a good trader is a good salesperson. And that stuck with me throughout the whole period where you can't differentiate. You can't just focus on relationships. You've also got to be focused on risk, and you've got to, it's how you develop relationships, by understanding risk.
Exactly, yeah. And then you ended up going to GS, right? So
I was at Merrill's for just over 5 years, and then Goldman offered me a job to help build out their single stock business in options. So I joined them in 2014. And I think I caught just that the markets just started picking up, and it was a different. Goldman was very macro only, and I started adding a bit more of a single stock flavor into the macro, and started doing things like custom baskets and thematics and options on these things. Then rose through the ranks there for a few years, and then 2022 I left to join Coinbase.
That was quite late. Okay, that's quite late. Didn't realize it's 22.
Right, so you got to tell us, how did that evolve? What was your path into crypto?
Yeah.
What, it's a big leap.
Because you've got a really good seat at Goldman's of all places, and you're like, I'm going to go to Coinbase now.
Yeah, it was. Yeah, I mean, a lot of people thought I was an absolute idiot.
Yeah.
But it starts from, I actually studied computer science, which wasn't the standard thing back. Now it's pretty sexy to do computer science, right? Like going into AI and things. But back then it was kind of, my course was filled with people who did clearing. Do you remember clearing? Like if you didn't get into your degree, you kind of just went and applied. Oh, just give me a role in this university. I'll do whatever degree you can give. So I was full of people with clearing, but I actually really loved computer science. But then tech wasn't really a thing you got into back then. I remember Facebook was hiring on our milk stands, they called it, right? Milk round, and everyone was like, "Why would you work for Facebook, which is posting on people's walls at the time?" Remember, it was just university posting walls. So tech wasn't a thing. So I was like, "Great, let's just go into finance." I loved markets, which sounds cliched, but I truly did.
Where did that hunger for markets come from?
It was growing up in South London, wanting to buy and sell things. I used to buy and sell things on eBay, importing from China and selling them on eBay. Yeah, back then. And I started, I got the aspect of doing deals and selling from, do you remember Comet before it shut down? I used to be a sales guy at Comet since I was 15. Although I actually only quit when I started at Merrill Lynch, so it put me through the whole of university and everything. I did that a lot, and it was all commission based. So it made you a bit hungry. It got you to really understand a client and sell things. So
interesting.
That mixed with I just loved the idea of stocks and shares, and I did the traditional stuff that everyone did. I loved Intelligent Investor by Benjamin Graham when I was like 15, 16. Everyone thought I was a weirdo, but like it was a great book, and it really taught you. I guess it introduced you to the world of compounding and macro, right? Which you don't really learn in school very much, do you? Right. So anyway, that was why that kind of had that bug in me. So I joined finance because it was kind of the traditional route. You wanted to make money, you wanted to have progression, and it was quite entrepreneurial. So I did that. But for me, I've always loved tech, computer science, finance, and then I fell in love with vol. And if you put them into like a big Venn diagram, crypto's right in the middle.
Yeah.
Right.
Crypto options for sure.
Crypto options is that squared.
Yeah.
So I've always had one eye on the crypto market. Like I remember I was mining crypto back when you could do it on a laptop in 2011 and so obviously I didn't keep anything. I didn't do anything. There was no observable price, right? So it wasn't really worth anything. Right. And then I remember, as you know, financial crisis, your career is just all you think about, right? So I was focused on my work. And then I remember seeing like Mount Gox blow up and I'm like, oh, thank God I wasn't involved in that stuff for very long. And then your career goes on and then one eye on crypto, you ride the wave a couple of times, obviously never sell, never take profit because you're like, oh, this is going to go to the moon. And you ride each of those waves. And then by the time I was at Goldman and I loved my job, and to this very day, I only speak about positive things about my time at Goldman. It was truly what made me, I think, in my career. But then you kind of stop and think, like, okay, I love my job, I love what I'm doing, but I could probably do this for another 10 years. But then what? Right? What am I going to do? In 10 years' time, I'll be in the same position of thinking, okay, what next? What next? And then crypto. The bubble had just popped and then it started to pick up again. I think Coinbase IPO'd when I was there, and I was like, oh, look, there's stuff happening. And so I I remember turning to my wife and saying that I'm going to keep for the first time in my career, I'm going to keep my ears open for opportunities outside of what I know. And then this came along. It was actually a client of mine, someone who I trust incredibly, and respect very highly, and trust implicitly, joined Coinbase.
Oh, right.
And he used to work at a hedge. He used to be a client of mine for about 12 years. And then I remember having breakfast with him and saying, why are you at Coinbase? Like, Coinbase is an exchange, like, for retail. And he started telling me about all the things that they're building in the prime world. And he introduced me to the exec team there. And it just happened that I think they were in the midst of talking about acquiring a company called FairX, which was a derivatives exchange in the US, a regulated derivatives exchange. And they didn't have anyone in the franchise on the sales side that really knew derivatives. So it's kind of like fortuitous timing that my friend introduced me to the exec team as a derivatives guy from TradFi as just building a derivative business. So we after talking, I took the leap of faith, as we call it now.
And then FTX blew up.
Yeah. I remember I left end of June. My second child, my son, was born on like my first day of gardening leave, right? So I had this really nice gardening leave and, we traveled a bit, amazing. Joined Coinbase in October and it was, I think, less than 4 weeks later, FTX blew up and I was like, what have we done?
All the former colleagues that said you're mad. What are you doing?
Yeah.
Going, told you.
Yeah. I think it was just a bit of pride for me to say, no, I'm sticking to it. I'm sticking to it. It was like, at this point, you're like, made my decision, I'm staying. But look, hindsight's a wonderful thing. And honestly, it was the best decision of my life. The way this industry is growing is just every day fascinates you. And it feels that, I have a lot of respect for traditional finance and especially at big firms, but I feel that if you are there, even at a senior position, you're kind of just a caretaker.
Yeah.
Right?
Yeah.
You're there to let the ball.
There's no innovation, right?
No.
Yeah.
Whereas what we do here in crypto, whatever you're doing, whether it's a startup, whether it's a Coinbase, or whether it's a protocol, there's real innovation. Right. And you've got, there's real grown-ups. We were talking about this before, right? That there's real people with pedigree coming into the market now as well. So it's not just cowboy the way it was like, 6, 7, 8 years ago. It's now you got real people coming in with, with a historical background. And I think it's changing the landscape in a good way. Right. But it hasn't lost the spark of innovation. So I've loved every moment in my crypto career so far. It's only been 3-ish years, but it does feel like a lot longer. It feels like I've been doing this longer than I've done.
I bet it feels so much longer, right? Especially because of the timing on when you came in.
Yeah.
Right.
I find out what I love about this space is like you've got the best of and with like some of the more TradFi people coming in like yourself, you got the best of like some really smart minds from TradFi, but everyone to come into this space has that entrepreneurial spark and that drive. So for me, it's like you're working with some really like inspiring, like smart people. It's a great space to be in.
And risk, I'd add to that people with risk appetite and people with open minds. Because how many people do you know from TradFi who still think Bitcoin's a Ponzi?
Yeah.
Right?
Yeah.
They're just not willing to open their mind to something new, right? So it's a great place to be. But now let's talk a bit about Coinbase taking over our very own Deribit.
Yeah.
Like you're effectively our boss now, mate. But maybe I should have dressed a bit smarter.
I don't think I'm ever going to be your boss. I think I'll always be the guy that gets you tea. But it's an amazing thing that I think that's happening here now. I think as I've got to know the Deribit team during the whole due diligence process and even after close, it's just you're blown away by their entrepreneurialism, their hunger, their drive. Some incredibly talented people. Because remember, we're not just buying the platform; we're buying the people.
Yeah,
right?
of course. Yeah,
and it's incredible what they've built. They've been running for 10 years. They've gone through ups and downs, but they're a phenomenal company. They're excellent at what they do. Right, like 80% market share in crypto options. They've done things amazingly well, and I'm super excited about bringing the Coinbase brand, the breadth that we have globally, and turbocharging Deribit.
Yeah, and just educating this US market to what they can do in crypto options, right? Because the US options market's huge, right? Thanks to the likes of Robinhood that you were talking about before. They've simplified they've kind of gamified option trading, right? But we've got to kind of say, by the way, this game also exists in crypto, right?
Definitely, I definitely agree. Yeah, for sure.
Yeah. Okay, so, and obviously because of the focus that Coinbase has on Insto with the Prime stuff, as you mentioned, right? This is something we've been talking about last few weeks, is this big shift in Bitcoin, in the volatility surface of Bitcoin towards puts, right?
Yeah.
And historically, it used to only happen when the market was correcting and everyone would hunt for some short-dated protection, right? But now it's kind of filtering down to the entire curve. And I can't help but think it's going to turn into kind of a persistent thing that just like we see in the S&P, for example.
There's a CCAR regs that forces people to always hedge downside risk, right?
Yeah, so the more of these real money types who own billions and billions of Bitcoin that are coming in, they kind of have to own what sort of protection do you think they have to own? 6 months, 1 year? Like how long dated does it have to be? Because the whole curve is getting dragged down now. And generally we only have liquidity out to about 1 year.
Yeah.
Right? But whereas before I was wondering, is it a bearish sign? Feels to me now it's just like that put skew is just going to keep getting more and more expensive. And you mentioned about calls as well, like the market being so deep, being so big now.
Yeah.
To actually get a 50% spike in Bitcoin is becoming less and less likely,
totally. Right? As I was saying before, I think it's just a function of the maturity of the asset, right? Like when Bitcoin was 10,000 or 20,000, the jump risk up 100%, up 50% was much more material, right? It was realistic.
Yeah.
But now the share capital that's required for that to happen in a short time frame it's just tremendous, right?
Yeah.
I'm not saying it won't happen, but it's a lot less probable than when Bitcoin was down at 10, 20,000. So I think naturally we'll see core skew dampening, not quite the way it is on the S&P, because I think Bitcoin and other digital assets generally have this jump risk, right?
Because there's still some element of price discovery.
Exactly. So I think there will always be a higher core skew than in TradFi, but I do think fundamentally it's going to start dampening, and then naturally you're going to start seeing put skew bid as institutions come in and they start managing risk the way they manage TradFi risk, right? And they want to manage downside scenarios. PM portfolio managers will only be allowed to deploy a certain amount of net risk.
But talking to institutions at Coinbase, do you have those conversations a lot around hedging and stuff?
Yes. Well, yes and no. Some of it's theoretical. So those that can trade options do. The way that Deribit is set up means that a lot of the asset managers with fiduciary duties and responsibilities, especially with US money, they can't actually trade Deribit just yet.
Okay.
But in general, they are all very, very keen on discussing ways to potentially hedge. If they're going to deploy money, they're not going to buy $10 of Bitcoin, right? They have to buy it in hundreds of $millions, if not billions. So therefore, they've got to hedge any sort of downside scenario which could happen. So we're definitely going to, we have that conversation already. And I think that's only going to continue, especially as, the money in TradFi, a lot of digital asset purists say that, they don't want institutional money coming into crypto. Crypto needs to be like completely decentralized and on-chain, right? I think that's, I don't think that's necessarily the right solution. I think that I get it in principle as to why Bitcoin was created and why it's off the grid. But in reality, for the asset class to mature, we need that institutional capital. And I think we're right at this cusp of where this institutional capital is dying to come in to crypto. And as that comes in, that's when we'll start seeing a lot of this maturity play out in options as well.
How are you seeing that institutional space? Well, because we all keep talking about we feel it, and obviously, we've seen like the big names of the BlackRock come in with the ETFs and whatnot. Like my biggest surprise in the space is the lack of hedge funds that have really come in. And some of the, obviously there's a few sort of big names in, but like for me, it kind of felt that, a macro hedge fund would immediately kind of get this and want to come in. That feels like it's been slow. I'm surprised that we've had a BlackRock and those sorts of guys come in before some hedge funds. How have you seen, since you've been at Coinbase, how are you seeing that evolve, and what are you seeing sort of coming through the pipe? How's that looking to you?
So I think a lot of it is to do with capital efficiency that drives their decision. So the first thing that they did was what they used to. So a lot of the macro and rates funds came in and started doing basis because it's like their first strategy that they can do. And they could probably do that without having to go into crypto rails. Especially post BlackRock's ETF launching and the success with IBIT, they could
buy the ETF and then sell futures on CME or whatever.
Exactly, or CDE, which is the Coinbase version, which is better than CME.
Okay, a little shameless plug there.
But yeah, you can. So they started doing these bases, and they were used to using excess leverage to try and capture small shifts, whereas crypto basis, even in Bitcoin and ETH, on average could easily be in a 6, 7, 8%, and then in the stronger times you get to like mid-teens easily, right? So it was very juicy for them. So that was the first foray.
That's a market neutral way to just make a load of money.
Yeah. I think that's why you've seen these public disclosures or these household name hedge funds that are long IBIT, which we can all know that that's not going to be delta, is it? Right? It's going to be market neutral. Yeah. So that was the first foray into it. Now they're coming into the space that they want to start running a bit more directional risk, and there are already some hedge funds that run directional risk. But the tricky part is if you are managing external capital, your mandate doesn't allow ownership of digital assets. Right. So they either have to raise new funds, like some big names have very successful digital asset funds, which are specifically for crypto. But if you are a broad macro fund, it's trickier to be able to go directly into crypto. But that's exactly what Coinbase wants to try and do. Want to bridge the gap where you can be a TradFi fund running under TradFi parameters, but have access to the deep liquidity pool, which is native crypto, rather than just via ETFs. Because you want to do more. The beauty of what you can do with crypto is you can do so much more with it. It's not just buying and selling. You can do DeFi, right? You can stake it. You can do a variety of different things to it.
What about go on.
Yeah, I was going to say, like, I still find that, again, like we all have the conversations with former colleagues, you know, who are still kind of thinking whether Bitcoin's a Ponzi and all this stuff. But like once you can get over that, and I think now it's difficult for anyone to say this isn't an asset class, it's here to stay. From a pure trading point of view, if you're a trader, I don't get how you can't just be obsessed with this space.
Absolutely.
Because the opportunities, the sort of spreads that are available.
What about tokenization though, right? What about the idea that in however many years in the future, like you'll be trading your stocks and your commodities and everything on crypto rails?
Yeah, and I think that's probably the biggest use case of blockchain, right? I think it will be the tokenization of real world assets, right? Whether it be real estate, or the most likely one at the moment already is money market funds, right? Being able to move money market funds freely with no friction, you know, and some of that may come in the form of stable coins, which are essentially the same. But then, real estate, tokenizing securities and equities, obviously is a market you've got to tread very carefully in for regulatory reasons. But it's definitely the way forward, right? Like crypto has shown that there's appetite outside of traditional market hours. Like the macro hedge funds, you ask how they really trade crypto, they use it as a release valve for macro events, right? How many times have you seen a geopolitical situation happen on a Friday night post the close, right? Something flare up over the weekend, and then, you know, by Monday, everything's settled. S&P is up 5 bips or something, right? In the meanwhile, Bitcoin has gone up 5%, down 4%, right? On a Saturday morning. So, you know, there's a lot of them. By tokenizing securities and equities, you open up the world of 24/7 trading, which is pros and cons. But nonetheless, I think there's definitely demand there, for sure.
For sure. And then what about zero DTEs, right? I mean, we're talking about crypto options on Deribit, but that has become more than 50% of the S&P options market. And, you know, people think of zero DTEs a bit like gambling. Now, personally, I don't think it is. Like, I think there's a lot of systematic theta harvesting strategies that go on in zero DTEs. That's actually where the real juice is in trading these things. But I imagine there's a massive market in crypto for that as well, right?
Yeah, I think definitely. I think, so, you know, Deribit does have zero DTEs, but I think if you look internationally, so the zero DTE phenomena and it's essentially it's like a cultural shift that's happened over the last, you know, four years or so, but that's heavily in the US. Outside of the US, internationally, the more east you go, they actually trade a lot very short term in perps, right? So I think they've naturally had access to the same sort of P&L dynamics without necessarily the theta harvesting, but like the delta dynamics via perps.
So you mean getting a lot of leverage to a directional move, basically?
Yeah. Right. So like you want to play the Fed rather than doing a zero DTE, you can just trade 50x leverage, for example. That's one way that. And
then your theta is the funding on those perps.
Correct.
Right.
Yeah.
Okay.
And make sure you don't get liquidated. But yeah, so that's the way that they've done it before. That doesn't mean that there's no appetite for it. I think it's a completely different strategy. I think you described it perfectly, that the zero DTE isn't necessarily gambling. Some people do treat it as gambling, right? But that's probably delta plays. But if you really do it properly, and you know, you think about your theta management
and event risk management as well.
Totally.
Right?
Totally. I think that's the way to really use it. I mean, I can imagine even institutions will start using that, right? When they can actually.
Speaking of event risk, we should probably talk a little bit about what's going on in the market right now.
Yes.
And we've got a big event tomorrow, which is the FOMC.
Yeah.
Over to you, Dave.
Yeah, I mean, last week was quite interesting, wasn't it? With we still kind of, we got this sticky inflation, and then we had that PPI number. That
PPI was light,
yeah.
And then CPI was slightly hot, right?
Yeah, and I think people think as a PPI, like producer price inflation, which is like wholesale inflation, as being more forward looking. And if you remember last month, that was actually quite high, and it kind of freaked everyone out a little bit. Like, okay, we got inflation coming through the pipe. Well, that kind of reversed. That came in, I think, at like 2.6. You know, headline CPI inflation still pretty sticky. I think it was like 2.9%. But given that the Fed have kind of implicitly said we're kind of happy with where inflation is, as long as it's not accelerating, which it doesn't seem to be.
And then the labour revisions.
And then so they focused on the labour market, and then we had these big revisions. What 911k jobs revised out.
Doesn't that make the jobs data just a farce though?
I mean, it's. I mean, again, it's kind of you talk about blockchain. You start going, what? Why is a lot of this data not available on chain so that we can have some more real time sort of data available? So they're now making decisions based on data that's A, lagging and then B, subject to these massive revisions. Well, now we found out that the US has basically had nearly 1 million jobs less than what they thought.
It's mad.
So it's mad,
Crazy.
right? It's
Absolutely
huge.
mad.
So the question, becomes,
As the market operates, don't you think that if that accurate data was given to the Fed a month ago,
they would have cut rates? Yeah. So yeah, look, it's nailed on 25. I think market's pricing about 10% chance of a 50. I think probably there's a higher chance than that.
Higher than 10%.
Yeah, I do.
Last week we were saying if they went 50, that the market would see that as a bit of a panic move, though.
Yeah, I mean that's the thing to weigh up. So do you go 25 and just tee up sequential rate cuts?
I think you do, because I think the market would like that. Right.
Yeah.
The other thing I think that's quite interesting from a risk perspective, something that's obviously been overhanging the market for the last sort of few weeks, well, really, I guess since Trump's come in, is the question around Fed independence. And it was kind of like, given where the data was, if he now starts cutting, it looks like he's under pressure to do it. I think now at least Powell's got the cover to cut without everyone going, oh, you're only doing that because of the political pressure. So I don't think the rate cuts will be met with this fear around independence being questioned.
Right.
So I think look, 25's coming. From a macro point of view, I kind of feel we're still in this kind of Goldilocks. The labour market is kind of flashing some warning signs, but I still think I'd characterise things as we got a slowing, not collapsing economy. And I think it's hard for the economy to collapse when you're running deficits north of 6%.
Yeah.
And they've got tons of room to cut rates. It's not like rates are at like 1% already.
Yeah,
right?
exactly. Yeah,
so the
yeah.
stimulative impact of bringing rates down from this elevated level should be quite good.
Yeah,
right?
exactly. Yeah.
But the question we all want to know is, does it trigger the breakout in crypto? Because crypto's kind of bouncing, but it's not doing what equities are doing. Equity is making a new high every day.
Yeah,
right.
Like I feel from a macro, like I've kind of got things spot on in terms of this kind of Goldilocks macro, like liquidity's strong and rising. Global M2, all these sort of measures. The dollar started to break down again, which is interesting. US yields are actually, I mean, it was only a couple of weeks ago we were worried about sort of some of the stress in European bond markets spilling over into the US. Well, now we had 10-year yields dip below 4%. These are really positive tailwinds for risk, and obviously you've seen the Nasdaq really respond to that, and particularly if you think duration's starting to rally, i.e. like longer end yields are coming lower, good for Nasdaq. That's hitting record highs. Should be the ultimate long duration asset is Bitcoin. Crypto not quite got there, but I just think we're just digesting supply. We hit record highs only a few weeks ago in Bitcoin, ETH. We're just consolidating. I think it looks quite healthy, and weirdly, and I'd love to get your view on this. It just feels like sentiment's really bearish, and everyone wants to call for the top. I'm like, I think we're consolidating, ready for the next leg higher, and Wednesday might be the trigger for that.
Yeah, it does surprise me how many people are thinking that we're near the top or going to top in the local highs very soon. One thing which always sits at the back of my mind here is that there's about $7.5 trillion sitting in money market funds.
Yes, yeah,
right.
Yeah.
So if the street is right, and I think as of yesterday, generally the big banks are saying 3 cuts of 25 before year end, right? So where do we need to get to trigger some of that 7.5 trillion flowing down into long duration assets?
Yeah,
right. And
because
inevitably
the rate is dropping basically.
Correct. Yeah. So like getting risk free at four and a bit is pretty good. But then at what point do I say if I run large risk in money market funds that okay, actually pays more just to go long Bitcoin or any of the long duration tech stocks or something. Maybe it is 3 cuts. So I think the language is important that gets spoken about tomorrow.
Yeah, absolutely. And I think like when I'm seeing all these people calling for tops, like particularly as it relates to ETH, like obviously lower US rates come, the more attractive DeFi yields look. So I'd expect DeFi activities to pick up, which good for ETH, good for other alts.
Yeah, so I agree with that. I also think that we're in a world now where TradFi traditional assets and crypto markets are converging in liquidity because we got these DATs, we got ETFs, right? They act like the bridge as well, right? So even if they do flow down, and many of the large DATs that have announced their mandate going forward, they mentioned they're gonna partake in DeFi.
Yeah.
Right.
Yeah.
So you'll see that as that $7.5 trillion goes into long duration assets, maybe some find its way into some DATs in the equity markets, which then flow down into crypto and DeFi and snowball effect, right?
Yeah, exactly. And like everyone keeps sort of trying to say that I think people have this view that when the Fed cut rates, markets actually sell off. And actually, I think something like 60% of the time, markets actually rally. It's been, and I think the world changed post 2008 in a way where we're more a function of rates and liquidity. But it's typically been in the past when, that they're cutting rates because things have turned and we're heading into
and they're
recession,
behind the curve, basically.
and they're behind the curve.
Yeah.
It doesn't feel like that now. So again, I think we've got quite a sanguine sort of backdrop. And rate cuts are just going to, again, keep facilitating. I still feel like the market's under position risk. I think equities trade like it is. Like people,
it definitely trades like
up.
people are short.
Yeah.
100%. Like it trades like people are constantly trying to like get this, knock it down for a little pullback, and the pullback just lasts about 2 minutes, and then it rips everyone's face off.
Again, coming into this month, right? It was September seasonality. Everyone was like, and again, if you're kind of underperforming this market and underperforming your benchmarks, you probably sat there, fingers crossed, I get a pullback to get in, and now you're kind of having to throw the towel and just gross back.
The only thing that looks a little bit ominous right now is the way the VIX is trading. So you've started to see the S&P make new highs above 6,600, but the VIX is catching a bid, right? That is usually not a great sign, right? For a sustainable bull market, you want to see vol grinding lower as the market rallies and makes new highs.
Yeah.
When vol catches a bid on the rally, yes, you can get a big squeeze move higher, but it's quite fragile to a reversal, basically, because it's kind of signaling that the street doesn't have as much vol as it normally does, and it might even get taken short vol, right? And so if an appropriate catalyst was to emerge that was quite bearish, it leaves a bit of fragility. Now, I'm not saying that there will be a catalyst that's bearish, but it's just generally, as a bull, you'd rather see vol going down than actually catching a bid. Right?
But is there not an aspect of that where we've had this brilliant run since April, non-stop pretty much, one way, that you start going, do you know what, let's just put some hedges in? Like,
yeah, it might be that. It might be that people are, as we're rallying, people are buying protection, which essentially makes the rally less fragile because they're saying, even if we get a dip, we're protected for it. There's some element of that potentially.
Yeah.
But also, there's a lot of supply that's usually coming on OPEX week and into the end of the month as well. So there should be a lot of vol that gets applied to the street that kind of sorts this problem out, and vol actually just continues to work its way lower.
Yeah.
Speaking of lower vol though, Bitcoin vol at 30.
Yeah.
What
I was
the
just
hell?
going to say, what exactly the dynamic you just mentioned, when I was looking at it a few days ago, Bitcoin seems to be, dealers seem to be long gamma, right? And it's trading like it's long gamma. ETH is the opposite, in my opinion, in the way it behaves. So I do wonder if, when the market moves over the next week or so, if we start seeing much bigger spikes in ETH.
Well, I think the ETH dynamic is different, right? Because historically, people would have sold ETH vol against any other altcoin vol they were owning, right? So, like, for all these different, owners of altcoins who want to earn some yield, they call over, right, in OTC space generally. And then what happens? That filters through to the ETH Deribit market on ETH, and there's a supply of ETH vol, basically, right? Problem is, anyone who's sold ETH vol has got their head chopped off because of the way it's moved recently. So now they just say, oh no, we'll just sell Bitcoin vol, and ETH vol's too dangerous to sell. So you got this massive vol spread between ETH and Bitcoin now, right? So yeah, I think you're right. And I also think that the DATs on ETH showed us there's not a lot of liquidity on ETH on the offer side, right? If a DAT wants to come and buy 2 billion of ETH, they move that damn thing. Yep. So I'm not selling ETH gamma until the foreseeable future because it's just not worth it.
What are your thoughts on? I think a lot of some of the bearish sentiment is around this idea of a 4-year cycle, and we're kind of coming to the end of that 4-year cycle. What are your thoughts around that? Are we getting an extended cycle, or is that something that still would concern you, that we stick in these 4-year cycles?
Look, I think the 4-year cycle no longer exists, in my personal view, I think that we've had a huge paradigm shift, right? Like whether it be, a lot of this was catalyzed by the administration in the US being very pro-crypto, opening the doors, deregulating a lot of the things, providing clarity. Coinbase has been very vocal about, trying to drive a lot of this new clarity for crypto firms to thrive in the US. And I actually think the US is actually leapfrogged. So I think we're completely in a different paradigm than we were in previous cycles. And the byproduct of that is we're having real corporates come in, treasuries come in, governments, family offices, sovereign wealth funds, right? I mean, it was only a few months back we started seeing it, like every week there was a new sovereign fund that bought it or bought Bitcoin, or a company announcing a treasury of Bitcoin. These things are only going to increase and become easier operationally. Yeah, right, and regulatory wise. So I think the 4-year cycles were boom and bust. I don't think it's going to happen. I think there'll still be sell-offs and opportunities and drawdowns. But fundamentally, we've opened the floodgates for capital. Yeah, there's a
powerful demand dynamic sort of coming through. I think as well, something I've spoken about on here is we're still trying to kind of find an equilibrium post the extremes of COVID. And so the economic cycles have been very, very different. And this Fed cycle has been so drawn out. I think there's an element of, this kind of transition more towards sort of fiscal and what have you. But, the Fed is still in a cutting cycle, and which looks set to go well into next year. So,
and the midterms next year. They're going to try and pump the market into
exactly
that,
right.
So
I agree. I think you've got both the macro cycle. I think feels more drawn out. So it's not so clean in the 4-year cycle. And then I think crypto's got this idiosyncratic secular story and secular demand story that potentially sort of prolongs things. Again, I don't know whether that's just a bias, my own echo chamber, and wanting that to be true, but it feels that way, right?
Yeah.
So
I don't want to make it a plug for Coinbase, but one of the biggest growth areas of the firm is something we call crypto as a service, right? Is essentially us becoming the AWS of crypto. Right, it's providing the infrastructure in a white labeled format. So that's growing exponentially because we're seeing demand from corporates, whether it be financial institutions or actual corporates, consumer facing corporates, that want to start doing things in crypto, whether it be accepting payments, whether it be offering custody.
Yeah, they'd be mad not to, right? They'd be mad not to offer that service. Right?
Totally, but they don't need to build it, right? So they've been plugging into our network and essentially using our rails and back end. That stuff never happened in previous cycles. Right? Yeah. So once the bridges are there, fine, money's going to flow back and forth opportunistically, but it's there.
Yeah. I mean, look, I think it's a resoundingly bullish message, as it often is on this show. But I mean, that doesn't mean that the market can't get a bit over its skis a little bit and have little wobbles. It just feels like the wobbles, there's just going to be so much appetite to buy dips. For people who understand the structural forces here, that those dips will be very short-lived, I reckon. Right? So
yeah, exactly. And again, going back to crypto, it doesn't feel like there's no real signs of over leverage or anything like that. It all feels very very
orderly,
benign, and orderly. So I think let's see what the Fed deliver tomorrow. I do think as well, Jackson Hole, he kind of flipped a bit dovish. And now he's got every reason to be. So, I think we're in for a good few months and a proper melt up. I think crypto catches up with where equities and gold and everything else has gone.
And suddenly feel underexposed.
I after speaking to him every week, I always feel too bearish. Right? But Usman, man, it's been awesome catching up with you.
Yeah, brilliant.
Great, likewise. I'm glad to be here. Thanks for having me. For sure.
Yeah,
Appreciate you coming on. And we'll leave it there for this week. Remember, like and subscribe so we can get amazing guests back on like Usman, and we'll see you back here next week. Cheers.